Video games in the background, ignore it. This is part 2. Part 1, my friend gave me a call and it cut off the video, so this is part 2 to the second part of 9 to 5 to Riches. Okay. This is S&P 500. This is the Vanguard S&P 500. The same thing as SPY, but it's a tiny bit better. This is VOO. VOO. This is what I use instead of SPY. Okay. Same thing as SPY. Chart moves the same too. So this is part 2. And from all-time highs, typically you want to buy at a 5% dip from all-time highs or a 10% dip. Very, very rarely there's a 15 or 20% or even 10%. But you can see from here, all-time highs was 20%, 15%. That's a 5% dip it was bought. All-time highs, 20%, 10%, 10% correction. All-time highs, 11%, 5%. It's a 5% difference. You even had a second time to get in if you didn't get in the first time from all-time highs. And then what we have here, all-time highs again, 24% to 20%. It's roughly 5%. The short term, 9 to 6. It's only 4% on the short term. So there's a potential we get a further dip, 5% to 9%, or something more like 513. Because recently, the lowest we've gotten is we bounced off 522.57, which is 522. So we don't want to get to the support, but we bounced off a recent support, which says we're in a consolidation period, which we're probably going to go higher. We might potentially get rejected at, we can potentially go to 527, which is like 0.5% up, and get rejected from there and see if we hold 521, 522 again. I doubt it. And then probably get a support buy at 518, 520, 515, something around here. But if not, I do believe the trend is going to complete the move here, where we're going to get the other shoulder. We're going to get around, 515, 513. Look at the top of this. 510. It's very close to each other. 511. 515, 516. 511 is really the ideal. That's where I would put my buy if we get there. But I believe, look at the past 3 months, 21% year to date, nearly 34% in 1 year. That's ridiculous. We're going to have a pullback. And even with this consolidation here, I think hopefully we can get a pullback all the way down to, that's ridiculous, 500. But what's very possible is to see 510. And that is, let's say, 17.5%, let's say 18%. 18 to 21 is only a few percent, but 18 to roughly 25% is 6-7% difference. I can see that's very possible as to 6-7%. It's about 5 to 10%. We can, likely get around here. That's kind of the way I look at it. So right now, as I said before, I have $34,000 in here, and I don't know why this keeps disappearing, the money, but $34,000 in here and $10,000 invested. I showed you in the previous video what I was invested in detail, and this is my buying power. I have $24,746. I have some buying power, and that is all from my 9 to 5 over a few years. What I'm going to do with that is I also just made $900 on Amazon from selling a covered call against the 100 shares I bought. And you can see the call got assigned at 185. My average was 184, and I made $1, which is $100 on top of the contract that I sold. Look, $814 right here. This is what I sold exactly 1 month ago. Yep, it was that easy. It was a guaranteed $800, and with a chance of me keeping my shares or the stock going down temporarily, Amazon stock, I knew what I was doing. So, when you want to know exactly what you need to be comfortable with the outcome, whether it's an extreme negative or an extreme positive. You need to be aware of the outcome, up or down, when you do a buy or investment. Okay. And when I was saying before, Neo stock, I got fucked on this stock, excuse my language. Why? Because was not let's go back to the basics. It needs to be a top 3 company in the world, a top 5 company in the world. If you're not buying this, if you're not buying an Amazon, a SPY, or something that follows SPY like VU, Tesla, Meta, Nvidia, Apple, Microsoft, Google, if you're not buying one of these, you're probably fucking yourself. Oh, I'm a SMCI. I was just watching you guys' YouTube channel. He had SMCI. He had a what $10,000 or $15,000 account. Kid's down 10 grand. He's down 50%. I'm down about the same too, but it's not 50%. It's 20. I could make 20% gain in 1 year, no problem, if not double that, if I play my cards right. And I'm just waiting right now. I'm not buying. Why is my money not invested? Jeff Bezos just sold a shit ton of Amazon stock. The market is at all-time highs still. And we're basically in a silent recession at the moment. And as you can see, what's happening with the majority of the market, we're getting a tiny relief right here, like on a tiny pullback. But the majority of it, we've been running like a goddamn mongoose here, cheetah. And it's artificially inflated right now, more than usual. Jobs reports, horrible. Many numbers are very bad right now, many reports. And leader of the FOMC, the chairman, the man that speaks and the market moves, Jerome Powell, he says, oh, everything's doing well. What I think is basically we might see a nice correction after the presidency. Typically, it's in November, October, but we didn't get that in October. This didn't happen this year. That was outside of the seasonality trends. We didn't get a large pullback this October. Typically, we do before December. There's a December run. Yeah, I think that's still coming. And that can be like that can make us go to maybe 500 or even hit like something crazy, like a 504, 500. Look, 28% at 504 to all-time highs right now is 36, or let's say 38, 28 to 38, 28, 38. That's 10%. That's realistic. People think, oh, that's crazy. I'm going to buy, right here. It's like, no, wait for a serious pullback, buy low, sell high. Where is the market right now? It's high. Why is it high? Look at the overall trend. You don't want to buy it when there's max greed. Even if we had a nice little pullback here, you might pull back, even to here into the 520s, which we were this week, and got a nice little relief bounce. People are going to buy this, but I don't think this is going to hold. I think we might come down to these levels, especially if some bad news comes out, because look what happens here. All-time highs. You get some slow chop, and then you get a sharp drop. Get bought back up. Oh, it's at support. It's above support. Right here, this is above support. Let's buy it back up. Oh, you buy it back up, and then the news is the same. You got bad news. Things just had a nice pullback all the way to back here. So you want to buy high, buy low, sell. And let's just go over this real quick with the patterns. This is, where did it go? It went to 455, which is, let's say, 5% on the year to date. Just 5%, 455. 5%. And let's see the high. The all-time high here. Oh, look at that. 11%. 5%. Roughly 5% pullback. When did it get bought up? Look, all-time high. That's what I'm trying to teach you. Look what I'm trying to teach you. Pullback, 5%. 6% here. 12% here. It's about a 6% move, or 5% if you bought it a tiny bit. See what I'm saying? All-time high. 12.5%. Pullback. 10%. Only pulled back 2%. This is not a correction. This is not when you should buy. But you should have bought right here when the serious move happened. You didn't buy right here. You didn't buy when the serious move happened on the downside, the discount buy. You missed this huge run. And maybe a huge run, maybe you bought up here. You know, it might be okay if you bought up here. You know, you're okay now because long term it's good. You know, you can buy at any place. Even this is why they say the highest rate of return over most traders is dollar cost averaging into SPY or VOO over the long period. The average rate of return with dividend reinvestment is roughly 10% on SPY. People may think that's not good, but you can be the average trader and not even make 10% your first 2 years because you lost money those years. Instead of making 10%, now you got to make 40% to make back those losses. See what I'm saying? So it's better to be safe and make money the slow way, the guaranteed way, or near guaranteed way, than the fast, quick, make money quick. That's how you lose money. That's gambling. That's how you lose money. That's how I've lost money. That's how my friends have lost money. I've had a friend that just lost 500 grand on a rug pull, random little biotech, you know, running stock that he's like, oh, it's up 200%, this and that, 100%. This guy he makes 100 grand in a week, and then he loses 500 grand. I'm like, okay, you just lost your entire life savings. He worked for all that money too. You know, it didn't come out of nowhere. He made it with his hands. And you can do it with a 9-to-5 too. It's going to take a little bit longer, but I'll show you right here. If you made it to the end of the video, here's a gem. Here is a gem. Quick tip, investment calculator. First one, sponsored NerdWallet. This one works well. I'm 26 years old. Let's say I start with $20,000, but I'm not the average person, I guess, because I have savings, and a lot of people don't have savings. Let's say $1,000. Minimum wage in California is $20 an hour, which is what I make now, and that's $3,000 a month. I get paid under the table. No, I don't. I pay taxes. Yeah, roughly $3,000 a month if you get paid cash for a minimum wage job, 20 an hour in California. Even if it's less, you can save $1,000 a month, man. If you're not paying bills. If you are paying bills, you can still save $1,000 to $500 a month. If you can't save $500 to $1,000 a month, lower your expenses. If your lower expenses are already too low, learn how to make more fucking money. Because even saving $1,000 a month, you'll see right now what I'm talking about. Okay, initial deposit. Say you have $1,000 in your account. Not a big deal. Even if you start with zero, it's similar. You invest $1,000 a month, or let's say $500 a month. $500 a month. Yeah, you're at a 9-to-5. Not that bad. Eat less. Don't eat out. Don't buy new clothes. Buy the generics. Buy the basics. Save $500 a month. Easy. I'm 26 years old right now. Let's say I'm 25 to make it even. 25 years old. Let's say 25 years until I'm 50. Average return, 10% on SPY. Let's make it 15% because I'm buying the dips. Calculate. That's $1.6 million. Let's say I invested $1,000 a month instead of $500. You know, I got a little bit better job, made a little bit more money. Oh, look at that, $3.3 million. How much did I invest? Oh, I only put in $300K and I'm at $3.3 million. That's beautiful. But when you do it on, 5 years, I total principal invested $60K. I put in $60K. Nice. But I only made $30K because the snowball effect where you make money and it stacks, the longer period, the better. 10 years at 15%, 280 grand. Total principal, you put in 121K, you're still up 158K. That's beautiful. Now the money really starts flowing in after 10 years, after 15 years. And people don't understand, I want to get rich in the next 2 years. Look, 2 years. 2 years investing $1,000 a month, starting with $1,000, 15%. 12 months in a year, 24, okay. You put in 25 grand, you're only up 4K, but you're still up 4K. Instead of keeping it in a bank account, instead of spending it on shoes, buying some bullshit car that works just as good as the car you have now. See what I'm saying, guys? And if you do it right, people, I look at my father, 70 years old, not retired. House not paid off. Imagine being 70 years old and looking at your friends that are 70 years old, because you're going to be 70 one day. And you're like, oh, yeah, dude, I have I have $3 million in my bank account because I was when I was 25 or when I was 30, and I just started investing from a long period. Okay, you're a rich man. You just have money now. Now you can buy a house. It's different. It's different when you have time. And most people have time. You just got to take advantage of the time. Don't ignore it.